Welcome, everyone. Let's talk about September 2024 because, wow, what a month for the US market. We saw these incredible, record-breaking highs clashing right up against some serious geopolitical drama. The Federal Reserve finally made its long-awaited pivot, and the AI boom just kept getting louder. So what on earth was really going on? We're going to break it all down.
And just to be super clear, we are focusing squarely on the action from September 1st right through the closing bell on September 30th, 2024. We're going to unpack the key moments that really define the month.
So here's our game plan. We'll start with the big turning point of the month, then look at the key drivers behind all the action. After that, we'll dive into some specific stocks that tell the story best, map out 3 ways things could go from here, and then wrap it all up with a final takeaway.
So what was the real story of September? Well, you can think of it like a classic tug-of-war. On one end of the rope, you had this massive green light from the Federal Reserve, basically signaling cheaper money was on the way. But on the other end, you had these really serious red flags popping up overseas, which created this tense, kind of unpredictable vibe for investors.
And despite that constant hum of risk in the background, the major indices just kept pushing higher, right into record territory. The whole thing was really powered by these 2 gigantic engines. First, the Fed making capital cheaper, which always gets investors excited. And second, this AI revolution that feels like it has almost limitless potential for growth. And if you wanted to boil the entire month down to just 2 opposing forces, this is it. The single biggest positive, no question, was the Fed finally cutting rates. They were essentially telling the market, okay, we're shifting our focus to growth now. But the biggest negative was a direct shot fired in the tech Cold War, China telling its biggest companies to stop buying NVIDIA's best AI chips. That one move really framed the whole month's conflict.
Okay, so let's dig a little deeper now. What specific data and global events were actually moving the needle? What was the why behind all these big market swings?
This one number pretty much defined the entire month. After 9 long months of keeping rates locked down to fight inflation, the Fed finally pivoted, cutting its main rate by 1/4 point. This was the signal investors had been waiting for all year.
Now, Fed Chair Jerome Powell was super careful with his language here. When he called it a risk management move, he was signaling that this was a preventative step, to guard against weakness down the road. It wasn't a panic button because the economy was already in crisis.
So what were those risks he was talking about? Well, the economic data was all over the place. On one hand, you had this fantastic Q2 GDP growth number and a really strong Philly Fed report. But then you look at the Empire State Index, and it shows a pretty sharp contraction. This is exactly the kind of mixed picture that made the Fed want to take out a little insurance.
And at the exact same time, the relationship between the US and China was a total roller coaster. The month started off looking good, with productive trade talks. But then, bam, the NVIDIA ban hit, followed by a new US-UK tech deal aimed right at China. And yet, by the end of the month, the leaders were on the phone scheduling a summit. It was just constant whiplash.
All right, let's zoom in from that big macro picture down to the company level, because these next 5 stocks and indices really tell the story of September perfectly.
You can't even talk about September without talking about NVIDIA. It was such a wild month for the market's most important stock. They announced this incredible alliance with their old rival Intel, a huge investment deal with OpenAI, but they also got hit square in the face by that China ban. And on top of it all, people started asking more questions about this circular funding idea, where NVIDIA invests in a startup, and that startup immediately uses the cash to buy NVIDIA chips. It just raises questions,
And then you have Intel, the comeback story of the month. The stock just exploded, up over 22% in a single day, after they announced a shocking $5 billion partnership with NVIDIA, with their longtime rival. This deal just completely reshuffled the deck in the semiconductor world, and it was a huge signal that Intel is dead serious about being a major player in AI again.
Oracle came along and proved that this AI boom was way bigger than just the chip makers. The stock went absolutely parabolic, jumping over 35% after an incredible earnings report. The big message here? The demand for AI cloud infrastructure is so huge it's lifting a lot of boats. And Oracle, with big wins like OpenAI and the TikTok deal, is claiming a massive piece of that pie for itself.
Even Apple, which had kind of been the laggard for a lot of the year, got its mojo back. We started hearing buzz about strong iPhone 17 pre-orders, Wall Street got bullish, and the stock started to move. And this was a big deal, because with Apple's rally, every single one of the Magnificent 7 tech giants was now in positive territory for the year. Just cements their total dominance.
But maybe the most important signal of the month didn't even come from big tech. It came from the Russell 2000.
the index that tracks smaller companies. It hit its first all-time high in almost 3 years. Now, this is so important because it shows the rally was finally broadening out. It wasn't just a handful of huge companies anymore. And that is a classic sign of a much healthier, more sustainable market.
So, after a month like that, the million-dollar question is, where do we go from here? Well, let's break down the 3 main scenarios that investors are really debating right now.
Okay, so investors are basically splitting into 3 camps. First, you have the Goldilocks camp. They believe the Fed can keep cutting rates without causing a recession and that AI earnings are going to be amazing. The strategy there is a barbell. You hold your big tech winners, but you also add some small caps to catch that broader rally. Then you've got the bubble camp, who are worried this is just a sugar high from cheap money. Their play is to add protection, like gold. And finally, there's the stagflation path, where inflation comes back or a recession hits. In that world, you pull back on risk and move into safer stuff like defensive stocks and bonds.
All right, let's bring it all home. What's the final takeaway from this really pivotal month, and what are the biggest risks we need to keep our eyes on?
You know, when you step back, September left us in the state of optimistic tension. The market's firing on these 2 incredibly powerful cylinders, the AI boom and Fed support. But valuations are getting really high, and those geopolitical storm clouds are still hanging around.
Looking forward, there are 2 huge tests on the horizon. First up is what I'm calling the earnings gauntlet. Expectations for AI companies are priced for absolute perfection. If they don't deliver truly spectacular numbers, the sell-off could be really sharp. The second is the tech trenches. The fight between the US and China isn't just background noise anymore. China's ban on NVIDIA chips is a real, tangible threat to the growth story of the very companies leading this market. And that leaves us with the final big question. The market has absolutely priced in the Fed's pivot to cutting rates. Everyone's celebrating that. But after a month of escalating tensions and sky-high expectations, has the market fully priced in all the risks that come along with it? That's the question that's going to define the rest of this year.